point of time. So I came back to the one which we were talking about earlier, the real account, U account. And if I sort it by the name of the instrument or symbol, you will notice that there are a lot of duplicates happening, which means the settlements, although in this bare conditions, the settlements are happening on its own. So let me take a look here. And you see that we have invested this particular algorithm is defined to invest around 9:45 so that the spread is adjusted. So it did that at 9:45. At 9:46 it invested. At 10 o'clock it came out with a profit of $59. WWD seems like it had a spike, and the artificial intelligence had that capability to understand that there could be a possible spike, which was here, and it grabbed the profit out of it. WDC came in at 9:45. At 9:58 it milked out $71. So all what I'm trying to say is, irrespective of the market conditions, it is also looking at with the AI capabilities to make sure that it makes money for us at 9:4. And it's not only the money which it is making, it is also ensuring, as per the algorithm mathematical models, that it is first covering up the commission, and then once it covers the commission, it then gets into the first level of milking technique. And once that is accomplished, it then starts moving into AI capabilities. So it's all uh, AI driven. It's all artificial intelligence capability driven. So it seems like we had invested on Tesla also, it seems today. Again, I have a connection problem. This is today, it's not a good day. So 9:44, it invested on Tesla. At 10:09, it moved out. So very likely it moved out here. At this point, it found a threat and it moved out. So you can set up different types of configuration. You can say repeat investment means as soon as it goes up again, it will start looking into it if it has cash, available cash, the buying power available with him. So it seems like it has got around 864,000, but it's still waiting to see the right opportunities for us to milk out profits with certain spikes. So again here this moved in at 9:45, at 9:59 it made $58. So the reason why I'm concentrating here a lot is to explain to my viewers that this is how you find a sweet spot. So when you find a sweet spot, it will milk out profits very quickly for you. So this is the effort which I'm trying to put in here. Yeah, my recording is still going on. So this is the effort I'm trying to put in here to explain different types of configurations which you can do. Of course, we'll talk about the market, which we have, which we will talk about in a minute. Then we will talk about list of stocks, means what are the type, how you maintain your list. We will talk a lot about fund management. We will talk about uh, here I think FUND, not S. Fund management here. What does the fund mean here? Then we will talk about cash management, and we'll talk about the risk management. You have already seen the milking techniques which it is doing based on AI capabilities. But further going down, uh, you can set up parameters, like you can look at SPY as a market. You can look at VIX, depends. If you're in London Stock Exchange, you can be looking at London Stock Exchange. If you're in Australian market, you can be looking at Australian market, whatever. So you can choose any indexes of your type. So I'll talk about more in S&P 500 SPY, so that this will be relating to this type of stuff which we are looking here. So you notice it was 1.8, now it is 1.9, means the market is heading little positive, and at the same time it is investing also and trying to get profits for us. So if I sort it out with the time, I know what is my last move. It seems like most of it at 927 around this time, it's all milking profits. So this is definitely to do with the sweet spots, but we will talk about that in a minute and correlate this to this real time which is going on. So what happens is in the strategy, you can define that, okay, you know what, if my S&P is over 0.25%, then I will go long. Or you can also say that if the S&P is over below minus half percent, I will go for shorts. But in between this region, it is more like a no investment zone. So that means the algorithm will not do anything if the market indexes are not qualifying. So this is what you are relating to here, where it is trying to tell you that okay, the previous close and all those stuff, it's not matching. So that means if you look at this one, this account, let's see what happened here. See, MTF failed, slow moving. So this is now, it seems like it qualified the market, but it's now getting issues with the individual stocks, which we will talk about as we explain the Excel. So this is one thing you can do. You can define any type of indexes, uh, and then you can tell the algorithm that this is not my investment zone. Anything over 0.25 or zero point 0.3, point whatever you want to put in based on your research, you can say that, okay, I will go long beyond that and I will go short beyond this. You can tell the algorithm also not to short. That means you're only looking in upward direction. The second thing is and or. Here what it means is basically you're telling that at 9:45, if S&P is 0.2 0.6% as an example, the conditions, you can say the criteria for long on a 2-minute bar, I want to see a higher high. So that means sometimes it may happen that at 9:45 it was 0.60. It looked like the market was bull, but the reality could have been different. At 2 o'clock the market is around 1.48. So that means the S&P is going down. So you can put another strict parameter here that I will go for long, say for example 2 minutes, or you can put 5-minute bar if it is taking a higher high, or I will go for shorts on a 5-minute bar if it is taking a lower low. So that means this is what it is looking at. It's not only looking at the S&P, but it's also looking at your 5-minute bar here, which is here. So if you take a look at this on a 5-minute bar, it seems like it's coming down, right? I will refresh it. Maybe I'm looking at the right time, I hope. 9:48, sorry, I have to refresh this. So you can notice that on a 5-minute bar, it seems like you can select any bar, but I'm just, since our strategy is based on 5, here it seems like it's taking a lower low. So that means at this point, it's not going to do any long investment because the bars are lower. So it is looking every 60 seconds, the market conditions, whether the market, although the market is bull, 0.25, it's a bull condition, but the last 5-minute bars are not in a bull condition. So it will not, this is not a sweet spot. So you can go as deeper into this matter as much as you can. You can look at a 5-minute bar or a 1-minute bar or a 2-minute bar. It all depends on your research, but you can set up parameters to make it that strict. Okay, so here we are looking at a 5-minute bar. It has to be higher high for a long, or for a short, it on a 5-minute bar, you can have it at a lower low. You can change this to 2-minute bar if you want to be, if you are interested on that, but this will come from your research. This is what you have to plot yourself in the strategy when you do the configurations. Now further down, if these two conditions satisfies with the market, then you have another parameter which is also very strong in nature. After it goes through a market check, it qualifies the market, you can tell the algorithm that, okay, you know what? Now look into the individual stocks. You can have large number of stocks as I will explain here, but you can look for opportunities on all those stocks to look for the fast moving average to be higher than the slow moving average by a 0.5%. And your fast average moving can be 5 days, 2 days, 10 days. Your slow moving can be 15 days or 25 days. So you can set it up like this also depending on what you want. So you can set it at 5.2 or 5.25 or maybe 2.10. So what you're doing is you're making it more harder here for the algorithm. I mean for the stock means if it is 2.10 with a 0.5% is practically you are heading north, versus if I do 5.25 although with a 0.5%. But now if I want to get more rigid, I can do a 210 with say 1%. Means I'm confirming this direction more north with a tolerance of 1%. So how hard or lenient you would be depending on the type of risk you would like to take or assurance you would like to take based on these parameters. So if the market conditions are bull, if it satisfies both these conditions and it is satisfying this condition like 2 and 10, 2 days average moving average versus 10 with a 1% tolerance, 99% chances you will come and hit into a sweet spot. So this is exactly what which is happening here. If you take a look at the instruments here, which I'm again trying to sort it out, uh, wait, let me sort it out with the name of the instruments. The system is a little slow, but you see that at 9:44 MU went in, at 9:58 MU got sold with a profit of $74. So this is exactly this what I'm talking about. So if your sweet spots are very rigid and the market conditions are configured accordingly, that you want to qualify your market first and then get to the stock with a very tight conditions, very likely within few minutes you will get out. But that doesn't mean that every day you will get into this situation. The same holds on the short side, where you can tell that the fast moving average could be should be lower than the slow moving average by a tolerance of 0.75%, and I'm looking at 5 to 15 days moving average. So it's doing all of it independently. For the long side and for the short side, they go completely independent. They are not dependent on each other at all. On the volume side, you can say that, okay, on a 1 minute volume, I want 100, or on maybe on a 5 minute volume, I want say 1000, whatever. It all comes from your research and you can just plot it into the configuration. So the same here with the short side, you can plot the short conditions that the market has to qualify, the individual stock has to qualify, and also the volume has to qualify for 1 minute to say you can keep it to 500. Now, if there is a rejection because of volume, you will get to see it here. You will get a notice of that it has been rejected. So let's see what type of rejections we are getting from here. So this is the real account which we are talking about. See, there's another thing which will happen is if there is a position which is already there in your list and in portfolio, it will reject the one from the new list even if it is buying power is available. So what it means is it will not do a repeat investment, whether it is on a bull condition on the bear side or on the bull side. So it will tell you that existing position criteria which has failed. The second thing it might tell you is also that the moving averages, if they don't qualify as to what I just explained, it will throw rejections for you. So you can fine tune these uh, configurations depending on how much of a risk you want to take versus the gain. So it's completely configurable and you are the one as a fund manager or as an individual investor who will configure these for you by yourself, and the algorithm will give you all the opportunities to make those changes. So this is one of the typical case of what is going on. Then you will see also other case, maybe here, I don't know whatever rejections it is here. It seems like this person is having a rejection because of the moving average is slow. That means the slow one is 115.85, whereas the fast one is 115.75. So it's below the tolerance. So it will not qualify for a buy positions unless the fast one is exceeding the slow one. Here, fast one is much lower than the slower one. So it has rejected. So there are many cases. Number of longs taken during the exceeds the configurable value. So here what happens is if you're telling the algorithm that I want to do only 10 trades a day, so it will reject stocks for you at that point. So the conditions could be very different based on all the configurations which you provide, and you will get exactly the reason for why this algorithm has rejected you every 60 seconds. But as soon as it finds a sweet spot, it will invest for you. But sweet spot don't come every minute, right? So that's how this algorithm with the precision based technique is keeping you safe at any given point of time. So now let's take a look at this one, the one which we were looking at, the rejections for that intraday strategy. Here the buy failed because the previous close of 32.71 versus the current close is 32.56. Index changed by 26%. Long rejected since the percentage is 0.5%. So here the condition is if you are not over 0.5%, you cannot invest. So it's a completely different type of a ball game here as compared to what I was just showing earlier. So every configurations are driven on its own. Every investor can define their own configurations, and you can basically configure it and let it run every day for you. So that's one thing on the market side. So now coming back to the list, you can have a static list. If you're an independent individual investor, you can have one solid static list with the configurations, I mean with the list as structured like this. This is the trading day. The date is the trading day. The algorithm will not take if the date do not match. One can use the formula like today with a bracket so that the trading day you don't have to come back and keep typing it again. So this is a document in the cloud which will be dedicated to you, to your account. And depending on what type of strategy you use, whether you want to do buy and short or only buy or only short is up to you. You can define the current period which will be basically within the range. So if you're saying that I want to buy anything between say $5 to say $1,000, I think all of them will qualify. But mm, it will not it will not qualify if it goes out of the price range. Here, target price is something where we are talking about that here one can have a target price or a milking price strategy in the configuration. So if you take a look at here, just a second, as let me see if I can tell you what it means here. Just a second. So you can specify whether you want to use the milking technique or the target price technique. So what it means is basically it's looking into AI capabilities when it is a milking technique. And if you have a target price strategy that you don't want to care about milking technique, you don't want to go about with artificial intelligence, you can set up your own target price and it will move on that direction. But if it is a milking technique, then it becomes a more complicated algorithm where it is using AI. So it has got 5 different slabs, and the first slab of it is to cover the commission and say whatever profit you want to define on your first criteria. But from second slab onwards, AI kicks in, where it grabs spikes. So you must have seen, which I have shown in many examples here in live trading also, that it got profits at a very high price. Let me show you here. Why can't I move it? Yeah. You see, there were profits, if I'm not wrong. Yeah, 300 for the 30, $64 WWD. You see, it caught this spike here. So the intelligence here, it seems like now we are doing much better. We had we are into 2K zone. So the intelligence here uh, is also looking at many different type of information which is gathers from mm, from all over. So that means that's one of the reason why trade log and the trade logs the same investment amount. Some gets 0.50. You have to excuse me for the smelling because I wrote it very quickly. Gets over 5% or even 3%. So that's exactly the example I have shown you, that basically this could be even 3% in reality. This is so slow. So this $364 which we got here, it could have been a much higher than 2% or 3%. So that's exactly what it is doing. So it's using artificial intelligence to identify where spikes can happen. It could be both directions, on the long side or also on the short side. And if it happens, it waits and it waits and it grabs it. So like in this case, you see that it seems like this was a trade which came in from previous day. As I told you, that new investments will not happen before a time you specify. So it waited, and at 9:33 today, it grabbed that opportunity. It waited because it realized that there could be some movement in that stock. And that's exactly what happened from previous day to the current day, which starts from here. So it happened, it expected a spike here, and that's what happened. And at 9:33, it grabbed the opportunity. So this is how AI plays a role. It is relating to a lot of market conditions and all sorts of stuff. Now, then you come into the sort order. Now, of course, you can sort it by volume or beta. It all depends on how you want to sort and classify, prioritize your stock. But if you're going based on the market conditions, which we just explained here, then sort does not make sense. But if you don't go with the market conditions and you have your own strategy to go only by the short, and you'd ignore these enhanced capabilities of order execution, then you can completely eliminate all of these and go based on a strict sort criteria based on your research. So this is something which every investor uh, would would be investing in. RIAs can have discretionary funds and all those stuff, which I will come to it. But you can have a static list where you're not putting in your research content, and this date is automatically changed based on that formula you put in today with a bracket. Or you can have your research, which we do, like we have our own research and we put in all the breakouts which is expected, but in the exact format. So everybody has to follow this format. You cannot touch the header, because if you change the header, the algorithm will go crazy. But you can put your date, or you can take today's date, put whatever stocks you want to trade in it. Usually you can keep 100, 200 stocks which you are seeing, but as you notice that here every mm, uh, 60 seconds, it's looking into all the stocks. It's looking into all the stocks and possible scenarios for you. So your list can be 100 stocks, 200 stocks, doesn't matter. It will look for all the opportunities from all the stocks within seconds for you. So that's the key benefit of quantitative trading techniques with AI and precisions here. So it seems today Amazon is giving me a little bit of a hard time. So the connection came back. So the point I'm trying to make is it's not only looking into that opportunity of that list, which I spoke about, but it's also at the same time also looking into opportunities to milk out profits using AI capabilities. So the list here, of course, we cannot recommend which stocks and all for you to trade, but you can maintain your own set of lists and let the opportunity, which is the sweet spot, which we spoke about here, identify the opportunity. And if you have the buying power and all those things available to you, like you have the buying power, available buying power at this point of time, it is not zero, so it'll trade for you. If it is within the tolerance level, which we will talk about within a minute, it'll trade for you. Yep, my recording is still going on. So this is a list which every client has to maintain. We cannot provide you this list. This is a completely a research based list, and we as an IT company are not supposed to tell you that go and invest in Microsoft tomorrow. We cannot do that. So I'm making this point very clear that you can have your own list. It can be a daily list based on your research. It could be a static list, whatever it is. It is your decision, not ours. But yes, you can set up these parameters saying that, okay, if these parameters or conditions satisfy, I want to go for long, or I want to go for short, or I want to go for both. It's completely at your discretion. So we are making this point very clear that it is absolutely not permissible for anyone to suggest any securities to anybody. And that's exactly, we are following that rule. We will not be doing anything in that nature. You have to figure out what are the stocks you want to trade and under what conditions you want to trade based on all what we have mentioned here. So now coming back to the list, what can an advisor do? Individuals, no problem. You maintain one list, or you can maintain two different strategies with two lists, one for your research, one for your live trading, whatever it is. It can be a research based list or a static list, whatever. But going forward, this gives a huge benefit to advisors. Now, the advisors who are basically, you can have a research based list for your discretionary clients, where you have client A, B, and C, and they are all using the same list based on your research. So if you're a firm who have research, who have people doing all this work for you, you can provide a research list exactly based on this, what do you call, the format, and that research list can be distributed by everybody to every client of yours. You can have 500 such clients, and everybody is getting one single research list. But if you're dealing with non-discretionary folks where people are calling you, or people are telling you, I want to invest in blah blah stocks, in that case your lists are different. So what you can do is, as an investor, if an investor is in a day trade, I'll come to that little later, but here the point I'm trying to make is every individual investors will be dedicated with their own list, provided the advisor gives them access. So there'll be no more need for phone calls. They can go directly there, make a change, and that change will trigger immediately. If the refreshing features are available, then the new list can be triggered immediately. If not, this list will be it will be activated the next trading day. So it all depends on how you want to configure it. But the point here, what I'm trying to make is every client can have their own dedicated list, which could be managed by the client himself. So they don't need to give you a call or email anymore. They can go to the cloud and make changes to that list, which will show up during as the trading proceeds. So these lists are all on cloud. So a client can directly change the list without asking the advisor. The effect will happen if all these conditions in permutations, configurations are qualifying, and it saves a huge time for the advisors, because now you don't have to wait for any phone call anymore. Now this also is becomes very idle. There is a feature called what do you call refresh it. So if you're a day trader, you can refresh the list anytime you want to. And once that happens, you are basically refreshing your list. So if you're a day trader, you can have one set of lists at 10 o'clock, At 12 o'clock, you can wipe out this list and have another type of a list depending on market conditions and all those stuff. So you can go on doing that. So having said this, I think I made myself very clear here that this is a list. This is your baby. Every client will maintain that list on their own. We don't even get to, we will not even look at these lists. We have nothing to do with this list. You simply have to make sure that you don't distort the format once otherwise the algorithm will reject you. So once you have this list without any space and all those things, you just maintain it and the algorithm will pick up opportunities for you. So now before I go to the next point, I wanted to see how we are doing with the trading here. So it seems like the this is the real trading, which is U account going on, and you will see that it has bought Tesla. No, this is not the one. So if you want to sort by time, no, let me do a reverse. It's right almost like 11 o'clock. This is the upward direction. So just at this around 5 minutes earlier, it seems like it settled something. You notice here at 10:46 it bought flex, and at 10:54 it sold flex. So it found that spike here in flex, it took advantage of it and moved on. So this is how artificial intelligence behaves. This is very important for people who are coming into techniques, that you don't have to be scared. It's all mathematical. So it's just doing exactly what it is you are asking him to do. So as soon as it took a spike from here to here, and it sensed that this price might go down, it just milked the profit for us. From here, it went in at 10:46 and it came out at 10:54 within 9 minutes. Yeah, 9 minutes. So this is the power. As soon as for individuals, if you're doing one stock at a time, you can keep flipping your money, right? So I will come to that little later, but this is the benefit of having quantitative techniques on trading with AI capabilities. So now, having said that, now we'll get to fund management. But before we get to fund management, I want to show you which area I'm talking about when it comes to the configurations. So let me connect here to a virtual machine. So now here you will notice, let's talk about the fund manager here first. So we have DU464. So this is all about the fund management part of it, where you can do all sorts of stuff, and this is exactly what I will again explain in the Excel now. So we will come to this, but these are the configurations which you can maintain and do accordingly. So I will come to that. So for the first thing is, it's the portfolio amount. Does not mean it's the amount which we'll be investing. So now the idea is, of course, in quantitative technique, you want to make sure of opportunities, right? Every 60 seconds, you're going to get an opportunity. So once you get an opportunity, I'm trying to also look here at the emails which is coming coming across. So it seems like the market is not over 0.25%, or what is it doing? It's around